Hello and welcome to another Major Market Movements End of the Week Market Review for October 16th, 2015. I'm Quaji, and in this video we're covering the FOREX markets, starting off here with DXY, which is the US dollar index market, and currently we've got just a 2-day positive candle movement to the upside. This does look like it's at least starting a correction that may not be finished yet to the upside. The overall picture for USD is just very choppy downward movement. This is looking more and more like a bull flag in development, a large bull flag that started all the way back here in March. And so that's what I'm leaning towards, but there's really no, and much with the same with the rest of the FX markets, there's really nothing standing out as a superb buying or selling opportunity right now while we're in the middle of this sideways downward chop. So for the most part, I've been leaving the FX world alone, except for USD JPY, until something far more clear pops up that's usable and relatively low risk and could produce some good results. So until that happens, I think it's safe to just hang out on the sidelines and watch the market turn for a while. So the QG3 for the USD is to the downside, so that's bearish. The 20 DMA is curled over and heading down as well, so that's all looking bearish. The 10 EMA and the 20 DMA are both key levels of resistance to watch for if the market does reach up for those levels. And the week does close as a hammer candle, so that could allow for some upside movement next week for some follow through. The dollar on the slow stow here, they've got it's open to the upside, so we've canceled the downside momentum, but the signal line is still underneath 20. So we don't have a clear reversal as far as this indicator is concerned. We could still be in embedded territory with more impulsiveness to the downside. So kind of a mixed signal here. If we had this married with this, does entertain the idea of some bottoming action, but I would wait and see until next week to see what kind of attitude we get going into next week before jumping on any of the long side. So if we see a completed impulse here, maybe up to 94, 95, something like that, and then see a slow, choppy, three-legged pullback, that might be a good signal to actually attempt a long side bet. But until we see that kind of action, I just don't see anything there that's worthwhile to do with it as far as trading is concerned. The EWO is still looking bearish to the downside. There's no positive divergence being built up there at this time. The RSI did come down, almost hit the 30 level, and now we're seeing a little pop back up. So might be getting some support there off that 30 level. MACD is still open to the downside on a daily basis and on a weekly basis, open to the downside as well. So both of those are looking bearish, and I don't have the price volume indicator for the US dollar index. They just don't support it here on TradingView. All right, let's move on to USD JPY. All right, so currently it looks like to me we've got this very choppy overlapping wave 1 down. This looks like a sharp 2. This looks like a wave 3 that's finished, and now we're getting another sharp 2. I think we're getting a 1-2 1-2 scenario. Still very bearish while we're below 120.33 or so. If we pop up above that in this particular run, or even challenge it, then the LA wave count is off, and we've got something far more interesting taking shape here that could be bullish. But while we're below that particular level, I still favor the downside. The QG3 is open to the downside with some with a bearish alignment. You also can see here on the Bollinger Bands, they've pinched in for quite a bit of time. Got a nice tight pinch right here, and now the Bollinger Bands are flaring to up. The upper band is moving to the upside, lower band to the downside. This is what we call a flare. And while the price is below the 20 DMA, all this pressure that's been built up is likely to produce a impulse to the downside. So I'm still expecting that, especially while we're below the 20 DMA on a daily closing basis. On the week, we do get a weekly negative close, but not overly so with this bounce up today. The slow stow is buried in neutral territory here between 20 and 80. The previous downside momentum that we did have is closed out, so this is really just very neutral from the slow stow. And EWO, really nothing to show you there, neutral. The RSI is still neutral here. We did break below the 40. That does suggest that we could slide a little bit further since that level is broken, but it doesn't look like it's in a big hurry to do so. The MACD is open to the downside on the daily and on the weekly, open to the downside. And again, we don't have the price volume for that. So overall picture for USD JPY, I think we're still in negative territory, still have potential for further decline, but that key level right here at about 120.33 and the 20 DMA are both, which currently that 20 DMA, where is that? Is at 119.90, 119.91. So somewhere in that range, very key resistance. And if this market is truly bearish, those levels should hold. Okay, so let's take a look at the USD JPY Elliott wave pattern. I do think this triangle pattern has broken to the downside, and what we've got here is a small hammer, some follow through to the upside, but it may be just coming up here to back test this previous breakdown somewhere right there at about 119.69. So again, key level resistance. I do think with this current move, it's looking more like we've got a 1-2, 1-2, 1-2 type scenario, and we still have a point of recognition to the downside yet to go. But again, that 120.34, 33 area, very key resistance at this point in time. We break above that, and this downside pattern is disrupted. The momentum to the downside is disrupted, and we could actually be entertaining the bullish side again. So I have to wait and see. All right, I know it's very short, not even 10 minutes in this video, but that's really all I have for you. As I continue to look at the euro, Great British Pound, the Aussie dollar, Canadian dollar, all versus the USD, and there's just nothing sitting out there that looks very appetizing for a low risk, high potential, high probability trade. So I think it's best to just leave those markets alone for now. I'll continue to watch, and as soon as I see something that looks delicious, we will be jumping on it. All right. Okay, that's it for now. We'll talk to you later. Adios.